Why choose Vincenzo's Gold Crypto Investing? Well, it's very simple. Let's take a trip down memory lane. First, you have Crypto Crow shysting you on Raven Coin. Up next out of the chute, we have BitBoy Crypto coming in for a nice bear market rally, trying to shill you on Peep Coin and Ben Coin and the rest of these fleece coins going down 99%. Then we got bobbling fake business guru Kevin O'Leary bouncing and bobbling his way through FTX and fleecing you on there. And then we have Logan Paul, Crypto, and that shyster Carl from the moon with his Costa coin that he's trying to fleece you on Costa up in the upper left corner. That's why you stick with old Vincenzo. Vincenzo's Gold Crypto Investing, bell notifications right there on the channel. Like it, subscribe down below, comment a little bit in there to help move us through the YouTube algorithm, and most importantly, that like button right there. Yep, right there, I'm talking to you. Road to 10,000 followers starts and is appreciated and needed with you. What we have here with that super simple, easy technical trading, probability-based system here that we trade off of and use on this lovely, gorgeous, increasingly dark, but yet short, early summer night. As the nights are short, the days are long, just like the cryptocurrency market. The pumps are short-lived, and the dumps in sorrow and the falling price seems to last indefinitely, just like the summer days go on indefinitely. But you can see with our breakdown on what we got going on in the macro time frame or the short-term time frame in this super simple, easy technical trading, unbiased, non-paid promoter, nor are we fleece heisting and shysting here, because we are not selling anything. We are giving you the exact price move that we can expect here, right? I'm not a financial advisor. No. Do I play one on my own radio show? This is strictly 106.7 Broadcasting Systems. My own personal opinions on the market. Right? But you can simply see, now that we got that all out of the way, what's happening here. We're going to zoom out to the 4-hour time frame, and we all know where we were at. We tried to pump from back here, and it's very important that we go back here. We tried to pump from, which would be in the daily time frame, the moving averages right there. See that? Let's move this over. Get over here. You see that right there? Right on the moving averages. It came up, got rejected like we thought, swooped down, got supported on the moving averages, and then unfortunately we're starting to perform the classic hook-nosed Jew bears reversal pattern. Right? It's a shysty pattern, it's a fleecing pattern, and it's things you have to watch out for, and it's something that we warned about that could be possible in a fake up move, right? But right now, what we have going on here, if you're trying to stay bullish, you got to break out of what we got going on here in the shorter time frame. If we break this down, and we needed to break it down even slower and even more, even shorter of a time span to get more data points, but you can see what we got going on here. And we've had several huge ones of these in the Bitcoin price over the last 12 to 15 months, as we've had a series of bear flags break down. And you have here the big dump. Oh, I knew that was going to do that. You got the big dump right here. See that? This is your flagpole. Now you have your flag where you have your rebound trading. You had the big volume push, right? Pattern breakdown. Then you start trading up the flagpole with declining volume, right? And when we talk about a price pumping and then it has an up and sideways consolidation, it's very bearish that the price is going to roll over on itself eventually. Conversely, if the price is a big pump and it has a down and sideways consolidation, that is very bullish, right? Now look what's happening here on the bear flag. We have the big dump, right? Big dump, and now we have an up and sideways consolidation. That's a very bullish consolidation for the bearish pattern to break to the downside, right? See this? If we zoom in now even closer with the 30-minute time frame, you can see now exactly what's happening here. You have your upper resistance up here, see that? And then you have your lower support, and that's the flagpole. And how you do a technical target on a pattern breakdown is from the top of the flagpole to the bottom of the flag to the point of a breakout, and say it breaks out right over here, we have a technical target on an initial dump of something we were warning about earlier in the XRP price. And this is why we warn you to stay away from shysters like Carl from the Moon, Crypto, Kevin O'Leary, the Logan Paul brothers, and the rest of those fleecers, AMTV, right? Didn't forget about you. They're all the time. Booze system. Just rebranded and remarketed Grant Cardone, the big fleece heister and shyster, right? Gotta watch out for them. But we have a 46 cent. Is that where this is at? No, where's this at? Right there. 46 cent would be your targeted move. And from the breakout point to the target, that's a nice 7 to 8% move. So we have a 8% watch in effect of a fall. And that would bring a grand total of a 48-hour dump total of greater than 14.5%. So that's what we're watching out for. And this is exactly what old Vincenzo and his probability-based system believes we're going next. If you're in a swing trade or you want to trade the market, this is where I think it's going next. I think we have a date with 46 cents and then we'll reevaluate the situation. But it could break as low as 37 cents that we talked about earlier, and which has been a major area of support and resistance for the better part of 2 years. And then finally, we have the Bitcoin price. And the Bitcoin price is quite similar. The old price is trading sideways out of this consolidation that it's been in, which is not H bar. Get out of that, nobody cares about H bar. Yeah. And if we zoom out over there to the daily time frame, you can see what we've had going on here is we've been in what I was talking about earlier. Since we had this mountain double top, we had this rising channel or rising wedge right there that started the bear market right there in green. Then we had the double topping reversal pattern as we showed you how an M topping, here's super simple technical analysis, M topping reversal pattern. Let's make this brighter so you can see it. Still can't see that, make that bigger. See the M topping reversal pattern. Now what you do out of here, and this is basic technical analysis, you go from the top, the mountain double top, top one, top two, neckline, support, 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 and support. You go to the neckline right here, and then you bring it down to the point of the breakout, and your targeted move would be down here at 14,487.59. And remember, we had a target there before, but then as we worked our way down in this bear market rally, after we had our initial dump, you'll see what started taking place. We had that mountain double top. Then we came down here and had a descending triangle, which is the exact opposite of ascending triangle, which is a bearish reversal pattern. A descending triangle is just facing downwards with descending overhead resistance and descending lower support. Those usually break to the upside, kind of telemarketed a bear market rally, pumped up to this mountain double top, and then we had a 50% collapse right here from 67,000 down to the mid 30s, right? A 30% or a $30,000 dump, a 50% crash. And then you'll notice what we started to do. Got that flagpole, the big dump, right? The big dump right here in the flagpole. And when we were in this, we were telling you, when all these other shysters like Carl from the Moon were telling you this was going to be a bull market push, and the bear market was not in effect, and the bull market, in fact, was still intact. We were telling you this was just a mid consolidation, and the targeted move would be from anywhere on the point of a breakout. And if you broke out way up here, you would have a technical target of all the way down here at $24,319, right? And you did. Look at exactly after a mid-ground consolidation right here in a smaller bear flag where you had your flagpole and then your flag and then another dump. You dumped straight down into that $24,000 range, right? Bam. And then you had a huge consolidation. Then you traded out of it, but you had one bear flag, two bear flag, three, right? And then now you have a rising channel because you can't have a small flag pole and then a humongous flag, right? That's not that. This was a rising channel where you have uptrending lower support and uptrending upper resistance. At the beginning of the channel is pretty the width is pretty similar to the end of the channel. That never changes. Just the price trends up and out into the future slightly, right? And that's what we're watching out for, because if this continues to break down, we're coming down to 19,000. If you get pumped to the upside, you can come back up to $29,969.69. Like, subscribe, and share. Peace and love.